So there's plenty of capital in the system. The question, as you alluded to when talking about the NIMs, is what's going to happen with demand. So we were talking previously to DLF, highlighting just how weak the real estate market is at the moment, and obviously that has mortgage implications. And then the corporate loan demand has still proved to be quite anemic. What do you think needs to change for there to be a better outlook for aggregate loan growth in India?
First off, I think, all of us know that systemically the loan demand is low, but I must admit, I myself, when I'm looking at the really long-term data, I'm surprised at really how low the demand is. To sort of put things in perspective, in terms of system bank credit growth, the levels we are at today, when we last saw this low of demand growth, Pandit Jawaharlal Nehru was Prime Minister in our country. That's how low demand is. It's unbelievable to me. And if you specifically carve out credit to industry, even within that, credit to sort of some of these capital-intensive industries like power, etc., they are at levels which we haven't seen in forever. So yes, demand is low, extremely low. Now, the wheels are clogged. Like, lots of things need to happen. I mean, there is the twin balance sheet problem. I mean, clearly the borrowers are highly leveraged, and it's very problematic. And anybody who has any slight improvement in their operating environment just goes ahead to reduce their debt burden rather than actually take on new projects. So there is a high leverage problem. There is a low demand problem from a capex perspective, and particularly with big policy events like DMON and GST coming up, etc. Understandably, the promoter community is waiting and watching to see how the world is going to pan out before they make commitments on big capex. So there is a demand side problem. And then sort of on the other side, of course, as we talked about, there is all this sort of high liquidity and the emergence of the bond market, which essentially means that whatever credit demand is there for the better rated corporates, they are today finding from a rate perspective the bond market a lot more lucrative than the bank credit market. So at least temporarily, that's where the credit is going, not to bank credit. So that's where we are right now. Now, what needs to change? Any and all of these, like I think some sort of a stimulus from the government side to kickstart demand, some sort of policy package working with banks and lenders to make sure that the NPA-led clogging of the wheels gets declogged, and banks are ready to make investment judgments and decisions again, and a sort of general emergence of confidence in the promoter community, so that they stop the deleveraging cycle and start on new project investments.
This is for industrial credit, for corporate credit, we understand. But what about retail? Because retail credit has also slowed down significantly, and that's a worrying internal, right? Because that was the main growth driver for banks for the last many quarters. Any kind of up move there, or is it still very sluggish?
No, you're absolutely right, Sonia. I think retail has pretty much taken on 75% plus of incremental credit creation in the sector for the last couple of years, and this year arguably it's about 100% of credit creation if you take retail and agricultural credit together. That's pretty much all the credit, new credit that has been given this year. So you're absolutely right. The sluggishness in that side, it can be very problematic for the sector. Even the tiny amount of sectoral credit growth that we are seeing is all coming from this sector, and half of this sector, give or take 40 to 50% of the sector, is mortgages. As we talked about before, that part of the business has had some impact of demonetization. It has been a bit less than some had feared, to be honest, but yes, it is there, and it's sort of noticeable. Mortgage demand growth now is down at about 11%, the lowest it has been in the last 5-7 years. So clearly, if that continues to go south, then that business is so big as a part of retail that no other business can grow fast enough to actually make up for a slowdown in mortgage growth. So the key thing to watch here is what happens to real estate growth.
All right, we did do that, and we will continue to do that. Jairam Ramesh, thank you very much. Jairam Sridharan, thank you very much for joining us in this conversation. Adrian Mowat, it was a pleasure having you with us. Thank you very much for dropping by in our studio and being our guest editor.
Thank you.
All right, now it's a time for a break, and also a little bit of a break from equities. Manisha Gupta, commodity editor, will join in with the first trades in the commodity space.